Hey everyone, welcome to my finance channel. In this video, we will talk about what happened during the first week of 2025 and what did it bring to the bond market. So let's start. Well, last week was a special week for crossing from the end of 2024 to the start of 2025. For bond market investors, some of them will sell bonds for guaranteed profits and another part may buy bonds and seek more opportunities for the new year. So what happened when these different kinds of power meet each other in the cross-year period of time? And what is my understanding about last week? Well, let me tell you the following story. So let's review the market situation of last week. Last week was close to the New Year public holiday. There wasn't much important news. We begin from the fundamental part, alright? The NBS released the manufacturing PMI data, which was 50.1%, weaker than previous one and expected one 50.3%. I think the economy situation was still in a slow recovery process, although the supply side maintained stable as always. For real estate part, the weekly data land transaction area of community buildings of 30 large and middle-sized cities was keeping to increase to 4.5 million square meters, which has been increasing since October. Okay, this is a real good sign of economic recovery, since the housing market is the biggest economic engine of our country. But you can't prove one thing just by one evidence, so we have to wait for more detailed data 1 week later. Well, next part is policy part. There were new fiscal and monetary policies released last week, so let's just skip this one. Third part are market rumors and other related policies. First is that some investment agencies were warned by PBOC for buying a lot of ultra long-term bonds, which weakened the enthusiasm for buying bonds in markets. Next one is that PBOC plans to take a medium and short-term bonds as deposit reserve, which caused the yields of 5-year term treasury bonds to decrease 5 basis points precisely. So the shape of total bond yield curve becomes a weird V-type compared with the week before. The fourth part is funding condition, which remained loose, but the price of financing was high, so there isn't much space for carry. When the hell will the PBOC cut the RR or other policy interest? But the onshore RMB exchange rate dropped over 7.3. This may alleviate the pressure on liquidity. The fifth part is about move of investment agencies. During the past week, funds and financial subsidies were the majority buyers in the market. Securities and agricultural commercial banks were the main sellers, while apparently the buying power overwhelmed the selling power. Agency investors, especially funds, still have a huge demand for high interest assets. A lot of worries about funds and some other investment agencies selling bonds to realize profits at the beginning of the new year. But the bond yields decreased 5 basis points in the first trading day of 2025, which means there wasn't much demand for realizing profits during the first week of the new year. So if we look forward to the first quarter, the hot points are the implement of cutting RRR and other policy interest rates, and the performance of the stock market, which performed pretty weak in the last week. So the most reliable way to invest in bond market now, for me, isn't chasing over lower yield of bonds, but in waiting for the yields of bond assets to rebound to a proper level, then buy it to make a good portfolio. So guys, this is my understanding about last week. Thanks for you guys to be here and watch my videos. And thanks for the share, like, and subscribe all my videos. I will always be here sharing my understanding and experience and waiting for you guys. See you until next time.